Is there a place in the world where property taxes don't exist? High net worth individuals and nomad entrepreneurs often search for countries that offer more favorable conditions, including the elimination of property taxes. While many governments impose ongoing taxes on properties that are already owned, not all nations follow this practice. Several countries have abolished property taxes, allowing individuals to truly own their property without incurring annual costs. The main motivation for this approach is to attract foreign investors and property owners, which can significantly boost a country's economic growth. Let's explore the top 10 countries where property taxes are minimal or non-existent. 1. Monaco. First on our list is Monaco, one of the smallest yet most beautiful countries in Europe, which does not levy any property taxes on residents. Monaco is famous for its stunning beachfront properties that attract foreign investors and residents alike. Without property taxes, owning a home here is even more attractive. If a homeowner in Monaco decides to rent out their property, a 1% tax rate is applied, which is paid by the tenants. Additionally, the stamp duty on property purchases in Monaco ranges from 4.5% to 7.5%, depending on the situation. 2. Malta. Located between Sicily and North Africa, Malta is known for its favorable climate, scenic coastlines, and its reputation as a business-friendly hub. It is a preferred choice for expat entrepreneurs. Malta does not charge property taxes. Instead, buyers pay a 5% stamp duty on real estate purchases. The Malta Global Resident Program allows individuals to obtain permanent residency and enjoy visa-free travel within the EU Schengen area, making Malta a great option for those seeking EU residency without property taxes. 3. The United Arab Emirates. Known as a global tax haven, Abu Dhabi and Dubai in the UAE offer several tax benefits, including an exemption from property tax. Instead, a one-time property registration fee of 4% is charged. With some of the world's best real estate developments at relatively lower prices, the UAE is becoming increasingly popular among property investors. 4. Oman. Ranked as the safest and friendliest country for expats, Oman follows a similar taxation model to other Gulf nations. There is no property tax for small taxpayers, while large petroleum companies are subject to a 25% tax. With no property tax, Oman offers a high standard of living, making it an appealing option for property investors. 5. Fiji. Fiji, an island paradise in the South Pacific, is not only a popular tourist destination but also a favorable location for real estate investment. Fiji's territorial tax system exempts residents from paying taxes on foreign-sourced income. With no property tax and relatively lower real estate prices, Fiji attracts many foreign investors. However, a stamp duty of 3% applies to property purchases by locals, while foreigners face a 10% duty. 6. Cook Islands. The Cook Islands, a renowned tourist destination in Oceania, also exempts residents from property, wealth, and capital gains taxes, making it a great option for real estate investors. However, property ownership is restricted for foreigners unless they have owned a business in the Cook Islands for at least 3 years. Despite these challenges, the tax benefits here are significant. 7. Cayman Islands. The Cayman Islands is another tax haven with no personal property taxes. Alongside the absence of capital gains, corporate, and payroll taxes, it offers unparalleled tax advantages. However, the high demand and ongoing construction can lead to steep real estate prices. A 7.5% stamp duty applies to property purchases in the Cayman Islands. 8. Dominica. Known as the Nature Isle of the Caribbean, Dominica boasts unspoiled beauty and minimal crime. It is popular for its citizenship by investment (CBI) program, and the country does not impose any property taxes. A 4% stamp duty is levied on real estate purchases, and while there are no separate property taxes in cities like Rizzo and Canefield, some municipal taxes may apply. 9. Thailand. Thailand stands out as the only country in its region without a national annual property tax. Instead, there is a real estate transfer tax of around 2% of the property's appraised value, which is usually paid by the seller. Condo owners in Thailand do not pay local taxes but are subject to an annual management fee. Stamp duty in Thailand varies from 0.05% to 0.50%, depending on the property type. 10. Sri Lanka. Last on our list is Sri Lanka, a beautiful island nation in Asia renowned for its climate, beaches, and appealing features. While there is no property tax in Sri Lanka, rental income is taxed at 20%. Stamp duty on home purchases ranges between 3% and 4%. If you enjoyed this video, make sure you like and subscribe, and don't forget to leave a comment with your thoughts and future topics of discussion.